Welcome to Byte-Sized Tech, where we like to blend casual conversations with insightful discussions on the latest in technology and gadgets.
Sounds fun.
Yeah, it is. And today we're going to be diving deep into the future of tech, especially all the buzz around artificial intelligence.
AI.
Yeah, exactly. AI and how it's impacting investments.
Yeah.
I think we all have a little bit of that AI anxiety,
A little.
Like, is my toaster going to start judging my breakfast choices soon or, all that. But don't worry. We're here to break it all down in a way that's fun and easy to understand.
That's right. We're going to explore some really fascinating trends from, the ups and downs of chip makers to the changing landscape of investments with giants like Vanguard and even the global race for AI dominance. So buckle up.
It's going to be a wild ride.
Yeah.
Okay, so let's unpack this, starting with how AI is shaking up the chip-making scene. On one hand, we've got Qualcomm, who's been struggling a bit lately because the smartphone market has cooled down.
Yeah, that slowdown definitely hit their bottom line. But what's interesting is that Qualcomm sees a big future in what's called edge computing.
Edge computing.
Yeah.
So instead of sending data to some massive data center, our devices are getting smarter on their own.
Exactly. Think of those AI-powered Ray-Ban smart glasses we talked about. The ones that can translate languages in real time and give you walking directions, all without needing to connect to the cloud for every little thing.
Right.
That's edge computing in action.
Very cool.
Qualcomm is betting big on this, and their current valuation is in the mid-teens.
Okay.
Some investors see that as a bargain, others as a warning sign. It all comes down to whether they can really capitalize on this emerging market.
Makes sense. So it's a gamble, but with some serious potential payoff.
Definitely.
Okay, but what about NVIDIA, the current superstar of AI chips?
Yeah.
They seem to be riding the wave pretty well.
Oh, absolutely. NVIDIA is riding high right now, largely thanks to tech giants like, Alphabet, Microsoft, and Amazon pouring billions into AI infrastructures. And NVIDIA's GPUs, or graphics processing units, are the workhorses behind all that AI processing power.
So we're talking about those super powerful graphics cards that gamers love, right?
Well, they're related, but these GPUs are specifically designed for the heavy lifting that AI requires, the complex calculations and data crunching. They're the muscle behind machine learning and all the cool AI stuff we hear about.
Got it. But there's a twist.
Right.
Those same tech giants investing in NVIDIA are also working on their own AI chips.
Exactly. Amazon is developing their own custom chips, and Alphabet is making some serious headway with their AI hardware. They're basically trying to control more of the AI supply chain.
Right.
Which makes sense from a business standpoint, but it could be a game changer for companies like NVIDIA and other chip suppliers like Broadcom. This vertical integration, as it's called, raises questions about whether NVIDIA can maintain its dominance in the long run.
Wow, that's pretty cutthroat.
Is.
So I've got Qualcomm trying to crack the edge computing market and NVIDIA potentially facing competition from its own customers. Talk about a shakeup. Where does cloud computing fit into all this? Because it seems like the cloud is still a big deal for AI.
Absolutely. Cloud computing is crucial for AI adoption because it provides the massive processing power and storage that AI needs.
Right.
And fun fact, Alphabet's cloud division is actually booming right now, fueled by all these AI-hungry startups.
Okay.
So the demand for powerful AI tools is definitely there.
That makes sense, but I remember you saying that analysts are watching Amazon's capital expenditures like hawks. What's that all about?
Well, Amazon is the big kahuna of cloud computing, and their investment decisions can tell us a lot about the overall AI market.
Okay.
Analysts are trying to figure out whether the initial AI frenzy is starting to cool down or if we're just at the beginning of something truly massive.
So it's like they're trying to read the tea leaves of Amazon's spending habits to predict the future of AI.
You could say that by looking at how much Amazon is investing in AI infrastructure, they can get a sense of whether the demand is truly as strong as it seems. If that investment starts to slow down, it could be a sign that the market is cooling off.
Okay, so keeping an eye on the big tech companies, especially their spending, can give us some clues about where AI is headed. It's all connected.
It really is, and understanding these trends is crucial, whether you're an investor or just someone trying to wrap their head around how technology is changing the world.
Speaking of investments, let's dive into the world of Vanguard, the investment giant, known for its super low fees and client-focused approach. I remember reading that they just announced another round of fee cuts, bringing their total to over 2,000 price reductions since they started.
That's right, and it's not just a marketing gimmick.
Right.
It's baked into their client-owned structure where they pass savings directly to investors.
So they're not just talking the talk, they're walking the walk.
Right.
But just how low are we talking about here?
Well, their average fee is a measly 7 basis points now. To put that into perspective, the industry average is a whopping 44 basis points.
Whoa.
It's like they're practically giving it away.
Wow.
It really makes you wonder just how low can fees go?
That's a huge difference. But isn't Vanguard all about index funds?
Yeah.
That's what they're known for, right?
That's a common misconception. While they're definitely famous for their index funds, they've also got a strong track record of active management, especially in fixed income. In fact, over 91% of their active fixed income funds have actually outperformed their peers in the last decade.
Really? So
Wow.
their low-fee approach gives them an edge even in active management.
Exactly. Their model gives their portfolio managers more flexibility to take calculated risks without being weighed down by those hefty fees. That can be a huge advantage in today's market, which can be pretty unpredictable at times.
So they're not just about passive investing. They're making strategic moves too. And I've been hearing a lot about this trend towards active ETFs and private markets. Is Vanguard dipping their toes into those waters as well?
They've been expanding their active ETF offerings and cautiously exploring private markets, but they're doing it all in a way that aligns with their core principles of simplicity and low costs.
So they're not just chasing the latest trends. They're being strategic about it and making sure it fits with their overall philosophy.
Exactly. They're committed to providing high-quality investments at the lowest possible cost, and they're carefully selecting opportunities that align with that mission.
That's a smart approach. It's like they're saying, we're not afraid to evolve, but we're going to do it on our own terms and in a way that benefits our clients.
That's a great way to put it. They're always looking for ways to innovate and improve, but they never lose sight of their core values and their commitment to their clients.
Okay, so we've covered a lot of ground here, from the wild world of AI-driven chip makers to the steady hand of Vanguard in the investment world. But let's zoom out for a second. We've been talking about AI and investments, but there's a bigger picture here, right?
Yeah.
This whole AI race is about more than just cool gadgets and making money.
You're absolutely right. It's about global economic and political power. The stakes are incredibly high.
So let's get serious for a minute. What's happening in the global AI stage? Is the U.S. still leading the pack?
Well, there's been a bit of a wake-up call recently with the emergence of a foreign AI system called DeepSeek.
DeepSeek. What's that?
It's a foreign AI system that has made some significant breakthroughs, and it's challenging the U.S.'s dominance in the field. This has been a bit of a Sputnik moment for many, highlighting the need for the U.S. to step up its game.
So it's like a technological arms race.
It is.
But isn't competition a good thing? Doesn't it drive innovation?
It absolutely can, and that's why many see this as an opportunity for a surge in American innovation. Companies like OpenAI are already pushing the boundaries, but it's going to take more than just a few companies to win this race.
So what needs to happen? What's the game plan for the U.S. to stay ahead?
We need a coordinated national effort. Think policy reforms, clear regulations and collaboration across different industries, and of course we need to invest heavily in AI development here at home.
Investment.
Yeah.
But isn't a lot of American money already flowing into foreign tech companies?
That's true, and there's a growing debate about whether we should redirect that capital towards homegrown AI electric vehicles, defense tech, and other critical industries.
That sounds like a pretty big shift. What are the arguments for and against that?
While those who support redirecting capital argue that it's essential for strengthening national innovation and security, they worry about the risks of funding competitors who might pose economic or even military threats down the line. On the other hand, some argue that restricting investment could stifle innovation and harm the global economy. They believe that open markets and international collaboration are key to progress.
That's a tough one. There are valid points on both sides. But isn't talent a key factor too? Do we have the right people to lead this AI revolution?
You hit the nail on the head. Talent is crucial. The U.S. has always been a magnet for top talent from around the world, but there are concerns about whether we can maintain that advantage. Some experts suggest we need to reform our education system, maybe by adopting a German-style trade school model that provides specialized training in AI-related fields much earlier in a student's career.
So less reliance on foreign talent and more focus on building up our own domestic workforce.
Exactly. We need to invest in STEM education and create a pipeline of skilled professionals who can drive AI innovation for the long haul.
Okay, so we've got this global AI race, a need for strategic investments, and the challenge of building a strong talent pipeline. Anything else we need to consider?
We can't forget about the geopolitical implications. The U.S.-China trade dynamic adds another layer of complexity to the situation.
Right, we've seen how Chinese companies like Temu and Shine are disrupting global supply chains and challenging traditional retailers.
Exactly. There are growing concerns about whether we need stricter regulations, tariffs, or other measures to level the playing field and protect American businesses.
So it's not just about technology, it's about economics and global power dynamics. It's all intertwined.
That's right. And all of these factors are connected. The decisions we make today will have ripple effects for the future of AI and for the global balance of power.
This is definitely heavy stuff, but it's also incredibly fascinating. This feels like we're living in a sci-fi movie, but it's actually happening.
It certainly is. The AI revolution is already changing the world in profound ways, and the next few years will be critical in determining who leads the way and how this technology shapes our future.
Wow. That's a lot to process, but I feel like we've only just scratched the surface. There's so much more to explore.
Oh, yeah.
We'll have to continue this conversation in our next deep dive.
Sounds good.
I'm already looking forward to it.
Me too.
All right, until then, thanks for listening.
See ya.
We'll catch you in the next one.
Bye.
Bye.
It really is just the tip of the iceberg. The AI landscape is constantly changing, and it's fascinating to see how different players are approaching it, from scrappy startups to these massive tech giants.
It's kind of like a giant chess game, with everyone making strategic moves and trying to anticipate what their opponents will do next.
Exactly. And speaking of strategic moves, we were just discussing how the U.S. needs to step up its game in the global AI race. One of the key strategies being debated is redirecting investments, potentially pulling back capital from foreign tech companies and pouring it into homegrown AI initiatives.
Right. That definitely sounds like a bold move. It seems like a lot of people are concerned about falling behind in this technological arms race.
Absolutely. There's a real sense of urgency, especially after the emergence of AI systems like DeepSeek. It's like a wake-up call, highlighting the potential vulnerabilities of relying too heavily on foreign technology.
I remember you mentioned DeepSeek's achievements were a bit of a Sputnik moment for the U.S. Can you elaborate on what makes this particular AI system so significant? What kind of breakthroughs are we talking about?
Well, DeepSeek has demonstrated some remarkable capabilities in areas like natural language processing and image recognition. It's even been able to outperform some of the leading U.S.-developed AI systems in certain tasks. This has raised concerns about whether the U.S. is losing its edge in AI innovation.
So it's not just about national pride. It's about potentially falling behind in technologies that could have major implications for everything from economic competitiveness to national security.
Exactly. AI is rapidly becoming a foundational technology, much like electricity or the internet, and those who control the most advanced AI systems will have a significant advantage in the years to come.
It makes you wonder, what are some of the concrete consequences of falling behind in AI? How could it impact our daily lives?
Well, for starters, it could mean ceding control of key industries to foreign competitors. Imagine a scenario where the most advanced self-driving cars, robotic systems, or even medical diagnostic tools are all developed and controlled by companies outside the U.S. that would have huge economic and geopolitical implications.
It's almost like we're at a crossroads deciding what role we want to play in this AI-powered future. Do we want to be the leaders, the followers, or maybe even left behind altogether?
Those are the stakes, no doubt about it, and that's why there's such a heated debate about redirecting investments. Some argue that we need to prioritize funding for American companies and research institutions to ensure we maintain our leadership in AI.
And I imagine there's pushback against that idea as well, right?
Yeah.
It's not like everyone agrees that cutting off foreign investment is the best approach.
Oh, absolutely. There are valid arguments on both sides. Those who oppose redirecting investments argue that it could stifle innovation and harm the global economy. They believe that open markets and international collaboration are essential for progress.
So it's a tough balancing act. On one hand, we want to protect our national interests and ensure we're not ceding control of critical technologies. But on the other hand, we don't want to isolate ourselves and miss out on the benefits of global collaboration.
It's a classic dilemma, and there's no easy answer. Ultimately, it's going to require careful consideration and strategic decision-making to find the right balance.
Oh, so assuming the U.S. does make a concerted effort to bolster its AI capabilities, is funding enough? I remember you mentioned the importance of the talent pipeline. Do we have enough skilled professionals to actually lead the charge in AI innovation?
That's a critical piece of the puzzle. Even with all the funding in the world, it won't matter if we don't have the people with the skills and expertise to develop and deploy these advanced AI systems.
So what are some of the ideas being floated to address this talent gap? Are we talking about major education reforms or something else entirely?
Well, one idea that's gaining traction is adopting a model similar to Germany's trade schools, which focus on providing specialized training in technical fields much earlier in a student's academic career.
So instead of everyone going to a four-year college, we'd encourage more students to pursue specialized training in fields like AI development or data science.
Exactly. It's about recognizing that not everyone needs a traditional college degree to succeed in these high-demand fields. We need to create multiple pathways for students to develop the skills they need to thrive in the AI-powered economy.
That makes a lot of sense. It's about being more flexible and adapting to the changing demands of the job market.
Right, and it's not just about creating new pathways, it's also about strengthening existing ones.
Hmm.
We need to invest in STEM education at all levels, from elementary school all the way through to graduate programs.
So it's about building a robust pipeline of talent, from nurturing young students' interest in STEM to providing advanced training for those who want to specialize in AI development.
Exactly. It's a long-term investment,
Yeah.
but it's essential if we want to ensure the U.S. remains a leader in AI innovation.
Okay, so we've got funding, we've got talent. What else do we need to consider in this global AI race? Are there any other factors that could give the U.S. an edge or conversely hold it back?
Well, one factor that we can't ignore is the role of government and regulation. The decisions made by policymakers will have a huge impact on the trajectory of AI development in the U.S.
So we're talking about things like data privacy laws, ethical guidelines for AI development, and maybe even policies to encourage or restrict certain types of AI research.
Exactly. It's a complex landscape, and finding the right balance is crucial. We need regulations that protect consumers and ensure ethical AI development, but we also don't want to stifle innovation with overly burdensome rules.
It's like walking a tightrope, finding that sweet spot between fostering innovation and protecting the public interest.
It is, and it's a conversation that's happening right now at all levels of government. The decisions made in the coming years will have a profound impact on the future of AI in the U.S.
It sounds like the stakes are pretty high. It's not just about who develops the coolest AI gadgets. It's about shaping the future of entire industries and even the global balance of power.
That's exactly right. The AI revolution is more than just a technological shift. It's a societal transformation. And the decisions we make today will determine what kind of future we create.
Okay, before we get too lost in the big picture implications of AI, let's bring it back to something a little more concrete. Earlier, we were discussing Vanguard and their unique approach to the investment world.
Ah, yes, Vanguard. They're a fascinating case study in how to stay true to your core principles while also adapting to a changing landscape.
Right. We talked about their impressive track record of fee reductions and their surprisingly strong performance in active management, especially in fixed income. But I'm curious, what are some of the specific strategies they're using to achieve those results?
Well, one of their key strategies is their focus on long-term investing. They're not chasing short-term gains or jumping on the latest fads. They're in it for the long haul, and their investment philosophy reflects that.
So it's about patience and discipline, not trying to time the market or make quick bucks. It's about steady, consistent growth over time.
Exactly, and that approach seems to be working for them. They've consistently outperformed many of their peers, especially in the fixed income space.
But I'm curious, how does their low-fee model play into this? Does it actually give them an advantage when it comes to managing investments?
Absolutely. By keeping fees low, they're essentially reducing the drag on their clients' returns. Every dollar that's not going towards fees is a dollar that can be invested and potentially grow over time.
So it's not just about saving money on fees, it's about maximizing the potential for growth over the long term.
Exactly. And that's a message that resonates with a lot of investors, especially those who are looking for a reliable and cost-effective way to build wealth.
It makes you wonder, if Vanguard's approach is so successful, why aren't more investment firms following their lead? Why are fees still so high across the industry?
Well, there are a few reasons for that. First, many firms are simply accustomed to doing business a certain way, and change can be difficult. Second, some firms may be reluctant to reduce fees because it would impact their profitability.
So it's partly about inertia and partly about protecting their bottom line. But if Vanguard can demonstrate that it's possible to be both successful and client-focused, maybe others will start to follow suit.
We can certainly hope so. Competition is always a good thing, and it would be great to see more firms prioritize their clients' interests by lowering fees and focusing on long-term value creation.
Now, we've been talking a lot about traditional investments like stocks and bonds, but I've been hearing more and more about alternative investments like private equity, real estate, and even things like cryptocurrencies. Is Vanguard exploring any of these alternative investment options?
They are indeed. They've been cautiously dipping their toes into private markets and exploring other alternative investment options, but they're doing it in a way that aligns with their core principles.
So they're not just jumping on the latest bandwagon or chasing risky bets. They're being strategic and making sure it fits with their overall investment philosophy.
Exactly. They're committed to providing a diverse range of investment options for their clients, but they're always mindful of risk management and ensuring that any new investments align with their long-term focus.
It seems like they're walking a fine line trying to balance innovation with stability.
They are, and it's a challenge that many investment firms are facing today. The investment landscape is constantly evolving, and it's essential to adapt to stay ahead of the curve, but it's also crucial to stay true to your core values and not get caught up in the hype.
It's a delicate balancing act for sure, but if anyone can pull it off, it seems like Vanguard has a pretty good shot.
I agree. They've got a solid track record, a clear investment philosophy, and a commitment to putting their clients first. That's a powerful combination in today's complex and ever-changing investment world.
Well, we've covered a lot of ground today, from the high-stakes world of global AI competition to the nuanced strategies of Vanguard's investment approach. It's been a fascinating journey, and I feel like I've learned a lot.
It's been a pleasure diving into these topics with you. It's always exciting to explore the intersection of technology innovation and finance, and who knows what the future holds. The only thing we can be sure of is that it will be full of surprises.
That's for sure. Yeah, it's amazing to think how much the world is changing right before our eyes, driven by these incredible technological advancements. And it all circles back to that initial AI anxiety we talked about. It's easy to get swept up in the hype or feel overwhelmed by all the complexities.
It's true, but I think that's why conversations like this are so important. The more we understand about these technologies and the forces shaping their development, the better equipped we'll be to navigate this new landscape.
Absolutely. Knowledge is power, as they say. So before we wrap up, let's try to distill some key takeaways for our listeners. What are some of the big picture ideas they should walk away with?
Well, I think one of the main takeaways is that the AI revolution is much more than just cool gadgets and futuristic applications. It's a fundamental shift that's going to impact every aspect of our lives, from the economy to geopolitics to the very nature of work itself.
Right. It's not just about robots taking over the world. It's about how AI is changing the rules of the game in so many different arenas.
Exactly. And that brings us to another key point, the importance of understanding the forces driving AI development. We talked about the global AI race, the role of government and regulation, the need for strategic investments, and the critical importance of cultivating a strong talent pipeline. All of these factors are intertwined, and they're all going to play a role in shaping the future of AI.
It's almost like a giant ecosystem with all these different players and forces interacting and influencing each other.
That's a great analogy, and it highlights the importance of taking a holistic view of AI rather than just focusing on individual technologies or applications.
So it's not just about who builds the fastest computer or the most sophisticated algorithm. It's about understanding the broader context in which these technologies are being developed and deployed.
Exactly. And that brings us to our final takeaway, which is the importance of informed decision-making. Whether you're an investor, a business leader, a policymaker, or simply a citizen trying to make sense of this rapidly changing world, it's crucial to stay informed about the latest developments in AI and to think critically about their potential implications.
So it's about doing your homework, asking questions, and not just blindly accepting whatever you hear in the headlines.
Exactly. Be curious, be skeptical, and be proactive. The future of AI is being written right now, and we all have a role to play in shaping it.
Well said. I think those are some great takeaways for our listeners to chew on. Any final thoughts before we sign off?
Just that the AI revolution is full of both challenges and opportunities. It's up to us to harness this powerful technology in a way that benefits humanity and creates a more equitable and prosperous future for all.
Beautifully said. Thanks for joining us on this deep dive into the world of AI and investments. It's been an insightful and thought-provoking conversation.
The pleasure was all mine. It's always great to connect with curious minds and explore these fascinating topics together.
Thanks for tuning in to Byte-Sized Tech. If you enjoyed this deep dive, like, comment, share, and subscribe for more fun tech discussions.
See you next time.
Bye.